$260 billion hangs in the balance tomorrow when Nvidia reports earnings. Option traders are pricing in the biggest single-day move we've seen in months. And with Nvidia representing nearly 8% of the entire S&P 500, this one report could determine whether we're heading higher or facing a major correction. What's up, future tech millionaires? Welcome back to the channel. We're going to break down the earnings report that can make or break your portfolio. I am your host, Ali, and today we're diving deep into what might be the most important earnings report of 2025. Nvidia's Q2 results. They're dropping Wednesday, August 27th, after the market closes. If you want to stay ahead of earnings that move markets this drastically, make sure you hit that subscribe button and turn on notifications. Trust me, in this AI revolution, being first with the analysis can mean the difference between profits and losses. Now let's break down exactly why Wall Street is so nervous and excited about tomorrow's report, and more importantly, how you should be positioning yourself. Let's start with the numbers everyone's watching. Wall Street expects Nvidia to report revenues of $46.05 billion, which would be above their own guidance of $45 billion. That's a 53% increase year over year, which sounds incredible until you realize it's actually deceleration from recent quarters. For earnings per share, analysts expect $1.01, up 48.5% from last year. But again, impressive numbers, but the growth rate is slowing down. The real focus will be on data center revenue, expected at $41.34 billion, representing 57% growth. Obviously, it's also down from the 73% they posted last quarter. Here's what's interesting. Wall Street analysts have been consistently raising estimates, but here's the catch. Nvidia has a history of beating expectations and then selling off. Looking at their post-earnings moves, over the past 8 quarters, they've averaged just 3.2% move and only finished higher than pre-earning levels once in the last 4 quarters. This suggests that meeting or slightly beating expectations might not be enough. The market wants to see a blowout numbers and strong guidance. With the stock trading at about 35 times forward earnings, there's no room for disappointment with Nvidia. But here's where it gets really interesting. The options market is pricing in about 6% move in either direction. For a company with Nvidia's market cap of roughly $4.3 trillion, that's $260 billion in value that could be created or destroyed in a single session. Now let's talk about the biggest wildcard in tomorrow's report. China revenue. China. Earlier this year, Nvidia warned of potential $8 billion in revenue losses due to U.S. export restrictions. But in early August, Nvidia and AMD reached a deal with the Trump administration to resume some sales to China in exchange for 15% revenue cut to the U.S. government. Obviously, this is huge because China historically represented 20 to 25% of Nvidia's total revenue. The resumption of sales, even with restrictions, could add billions back to their top line. But here's the kicker. This revenue restart won't fully impact Q2 numbers, since the deal was only announced in August this year. What we're really looking for is guidance for Q3 and beyond. If Nvidia can guide for revenue that includes meaningful China contributions, we could see a massive positive surprise. Analysts are expecting Q3 guidance around $53 to $55 billion, excluding China. But if China adds in $3 to $4 billion, we're talking about $57 to $58 billion in potential revenue. The market is also watching for any commentary about Nvidia's H20 chips. Those are the modified versions designed specifically for the Chinese markets. Early reports suggest strong demand, but we need confirmation from management. There's also the geopolitical angle. With the Trump administration's taking a more business-friendly approach to tech exports, that's potential for further relaxation of restrictions. Nvidia management will be asked about the sustainability of China's business and whether they expect further policy changes. The biggest long-term question isn't about one quarter's numbers. It's whether this AI boom is sustainable. We're starting to see some cracks in the narrative. Companies like Meta, and Alphabet are spending hundreds of billions on AI infrastructure. But investors are getting really impatient about seeing returns on that investment. There have been reports about GPT-5 being underwhelming, and some analysts are questioning whether we're in an AI bubble. Nvidia's management will need to address these concerns head on and provide evidence that demand from hyperscalers like Microsoft and Amazon and Google remains robust. Here's what I'm watching for. Commentary about the next generation Blackwell architecture from Nvidia. The GB200 and the GB300 chips represent the future of AI computing, and management's tone about the adoption rates and production ramp will be crucial. Early reports suggest strong interest, but we need specifics about volume pricing. Also, watch for any discussions about inference versus training workloads. Training large language models require massive compute power, but inference, actually running the models, might need different, potentially less expensive hardware. If the market is shifting towards inference, it could impact Nvidia's average selling price. The competitive landscape is also heating up. AMD is making progress with their MI300 series, and companies like Intel and even Amazon are developing their own AI chips. Nvidia still dominates with an estimated 80 to 90% market share. But any sign of market share erosion would be concerning. So, how should you trade this? First, let's talk about the risks. With option pricing, in a 6% move, you need to be right about both directions and the magnitude to make money on short-term option plays. Even if the stock moves 4% in your favor, you might still lose money on options due to failing implied volatility. For beginners, I generally avoid playing earnings with options unless you really know what you're doing. The house edge is significant, and even professional traders struggle with earning plays. If you're bullish on Nvidia's long-term, consider using any post-earning weaknesses as a buying opportunity. Historically, Nvidia has recovered from earnings disappointments within 2 to 3 weeks, and the AI story is still intact, and any temporary sell-off could provide a better entry point. If you're already holding Nvidia, consider taking some profits before earnings. If you're up significantly, you can always buy back after the dust settles. Given the stock's run up into earnings, there might be some profit taking regardless of results. If you're an intermediate investor and you want to play the calls against your position and any of that, we don't recommend any of those covers, and we don't do it on our time or in our portfolio, and we highly recommend you stay away from it. One more thing. Remember that Nvidia's move will likely impact the entire semiconductor sector with broader tech indices. For example, ticker QQQ, which has significant Nvidia weighting, could see a 2 to 3% move just from Nvidia alone. That's my complete breakdown of tomorrow's massive Nvidia earnings report. What's your play? Are you betting on a beat or a rise? Or do you think expectations are too high? Drop your predictions in the comments below. I love seeing your analysis. If this earning preview helped you prepare for tomorrow's action, smash the like button and share it with anyone trading tech stocks. And definitely subscribe with notifications on. Remember, earnings are just one data point in a company's long-term story. Whether Nvidia beats or misses tomorrow, the AI revolution is still in its early innings. Focus on the long-term trends while managing your short-term risk appropriately. I'll be watching every word of tomorrow's earnings call, and we'll break down the key insights for you in a future video. Keep building that wealth, stay disciplined with your risk management, and I'll see you in the next video.